Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, November 13th, 2016. I hope you guys are enjoying this beautiful weekend and let's get started. So, one of the, I would say, important notes that we have to be looking at right now is the indexes are all over the place, meaning you'll have the NASDAQ that's down a ton, you have the S&P that's usually hanging around plus or minus 10. The Dow's been really strong and the small caps have been strong. This is all kind of jockeying for a position based on Donald Trump's victory. So you have the small caps that are rallying or been strong because they're basically made up of biotechs. And if you remember what Hillary Clinton was going to do was just put big there's just going to be a lot of loopholes that they were going to have to jump through. I can't even really think of the word for it. But anyway, they were going to put just a lot of it was going to be very difficult for these biotechs to get anything through. And when they did, we know that they wanted to be able to control the prices. The government wanted to be able to control the prices of the private companies in the biotech. So when Hillary lost, everybody started jumping back into the biotechs because that fear is eliminated or it's been scaled back drastically. So then we have the Dow that's been strong, and primarily because most likely the Fed is going to have to loosen this vice grip on the interest rates. And if the interest rates start going up, I know a lot of people look at it as as a really good thing that they're down, but what's happening is the banks aren't lending money out because it's easier for them to borrow the money from the Fed at, say, a quarter point and go make another investment and get a half a point and have zero risk in it instead of lending money out for very, very minimal return with a lot more risk. So the banks are moving up, and they're primarily in the Dow, and that's what is causing the strength in the Dow. Now we have the NASDAQ. I'm not really quite sure, what's the rhyme and reason for the drop based off of the elections. So I'm sure there is a reason that I just don't, I haven't really looked up. But the NASDAQ's been really weak, and the S&P is made up of a lot of stocks from the Dow as well as the NASDAQ. So it's, that's been kind of just down minimal or up, some. And that's really the confusion that's going on. So my takeaway is this. I don't think that they're all going to, let's say, end this in the same direction of the upside. I think most likely they'll end up doing this to the downside, meaning you are going to start to see the Russell 2000 and the Dow get weaker and start following the NASDAQ lead or the S&P. We'll pick up some steam to the downside. I believe that there's more room down than up as far as points, but I'm not overly bearish on this market. I'm bearish, yes, right now, just because I just 100 and whatever 20 points in 3 days or 4 days. That's usually not sustainable. So short term, I am bearish. It could turn into an intermediate term bearish, but I'm not really even crossing that bridge right now until the dust starts settling, and I don't think we've really seen it settle yet. So let's just go over some of the patterns real quick and what we see. So this is the daily chart. This is that rising wedge. We broke through it. We almost did a back test of it. Maybe they have to come up. So you can see even if they do a back test of this bearish rising wedge, they could make new all-time highs, but it still can be bearish because this bearish pattern never played out here. This bearish pattern never played out. So if we start getting another move to the upside and we set up 3 bearish patterns, say the velocity of the move to the downside once things break will be pretty furious. So Here we have the bearish rising wedge. This is looking for a move to come someplace down into the 1956, 1890. Now, I don't know what the roadmap is going to be to get down here, and it may not ever get down here. Not all patterns play out. This just has a high percentage. You can see momentum is neutral right now, so he burned off the oversold levels. And as I said, this went from very overbought down to very oversold, and we really just went sideways. And I was mentioning that, that's not bearish. You can't, try to force feed a bearish view. If we burn off the technicals, burn off the overbought and go into the oversold, and we just go sideways, that's pretty bullish. And if it breaks out, we could see a pop to the upside. And that's, really the reality of this. But the patterns and a lot of other things are looking down. But as far as point wise, like I said, we could get a drop down to this 2048 and then pop back up again. I still think we need more information as far as what they have planned, but it's, right now, if we just look at the pattern, the pattern's looking lower, but the fact that we just kind of consolidated as we burned off the overbought levels is kind of bullish. So it's kind of equaling itself out on that. On a 60-minute chart, this is one of the reasons why I believe that we're going to be heading down before up. Is we actually have some bearish divergences in place. We're very overbought right here. You can see momentum in the MACD have crossed to the downside. So any strength I would be using to short, and maybe make a clear break of 2194 as your stop if we get a pop up here and you short it. But anyway, the fact that we already have the cross, we have some bearish divergences, and we're very overbought. I believe that there's more points on the downside, and it may just come down to this 2138 or maybe even the 2125, or they may come down and close the gap, at the 2089. So I don't believe that they're busting up to the 2250 or 2300. So I think a pullback of, anywhere from 40 to 60 points would make sense before they make a decision on whether they're going to continue down or up. So really my target area would be right here for the first trade, and then if it starts breaking this support, then we start looking lower, and if it starts breaking this support, then we start looking at those the targets from the daily bearish wedge that we had. So if we look at a 15-minute chart, again, bearish divergences, we burned off a good chunk of the overbought, but this is a short-term chart. But we did get some. You can see it increased volatility once it started going down. So we may be forming some kind of triangle right here, and what that would look like would be something like this, where the bulls like to form these, and it's a good pattern to trade, because all you're really waiting for is a break of the trend line on it, and you can see how it's shaping up, where we're making what it is it's lower highs and higher lows to form this triangle, and then really the way that you trade it is if it breaks to the upside, you go long, and if it trades to the downside, you go short. Now, my take on it, just because of the bearish divergences as well as the oversold momentum and the bearish patterns, is if we get a break to the upside, you're still going to be able to use that to build a short position, because once it breaks out of this should be the last move before we see that bigger move to the downside. Now, if it breaks to the downside, what will probably happen is we'll get down to that 2138 level, come back up and back test this line again before heading lower. So right now, I think this week is going to give us a lot more information than we've had. I know into the elections, I was just kind of neutral, because this market was really just going ballistic in both directions, and it wasn't worth trying to pick a up or down, because it was just, if you were wrong, you were going to get absolutely smoked. So there's times you just step back and let the bees leave the hive, and then you start figuring out if there's honey in there to take a trade, and that's really what we're doing now. The bees are starting to get away from that big hive right there, and now we start seeing, okay, if it pops up, up, where do we want to start looking to build a short position if you haven't already done it? If it moves down, where's the first support going to be for the pop up? But the most likely we're going to be heading lower. So with that, let's see what plays out next week. I'm kind of neutral because if it heads up or down, I can build a perfect case for it. But up, I think, is limited. Down, I think there's going to be more points. So enjoy the rest of your weekend, and I will talk to you guys in the morning.